Can you hear my voice? Everybody indicate you can by just giving me a thumbs up. Give me a thumbs up if you can hear my voice. That's beautiful. Okay, so today, as I said, I want to quickly take us through what we'll be doing today, and it's going to be very impactful. I believe so. And I also believe that anytime you gain any knowledge, okay, is an addition from what you already have before now. Okay, so I want to believe that it's going to be very effective. So let me just open my WhatsApp that I'm going to be using. So this is the WhatsApp. Sorry, the Excel I'm going to be using. Okay, so while I was yeah, so look at the way the end result is going to look like. So look at the way the end result is actually going to look like. So this is the double entry principle. For every debit transaction, for every debit entry, there's a corresponding credit entry and vice versa. So before we start, let me just water the ground by telling us that the double entry principle dates back to a long time ago, back to the medieval period, okay, where then there are a lot of barons that they normally give land to people to farm or to use to cultivate land. Then at the end of the day, they expect those people to come and account for whatever they did with such kind of lands. And then that is where they started employing the services of people like accountants, farmers. They needed people that will help them in valuing whatever was done and everything in order for them to get accurate result. So I think that is when all these double entry principle came into being. For every debit entry, there's a corresponding credit entry and vice versa. Another thing that you should also know is that you should also know what they call the accounting equation. For the accounting equation, they say that for every asset that you see that a company owns, so every asset that a company owns is equal to the liabilities, okay, the people they are owing, that is the creditors, liabilities, okay, it's equal to the liabilities plus the equity. So equity represents the owner's contribution, right? So now, any asset that you are going to see any company have, okay, the way they get it is either they borrowed money from people they call their creditors, right? Those people, like, it could be a bank or anything, then plus the contribution of the owners. Now, mostly you discover that when a company is about to kick off, the owner needs to actually inject some money into the business. So they call it equity, right? They call it equity. Make sure that your mic is not unmuted. Okay, so let me also make sure that that is not possible. All right. So back to the matter. So you discover that when such happen, you discover that. So quickly, let's look at how I built this my double entry whatever. So the first thing is that I have this section where I started with the serial number, where we can actually label the numbers of transactions that we've posted. Then over here, we have another place where we have all the transactions, just like the way you have source documents. Probably you want to give people money to buy fuel. There are paperwork that you do, okay? All those narrations on them. This is where you put all those narration, right? Then at any time you have any transaction, whatever transaction you have, two accounts are always affected. If one account is going to be debited, while the other account is going to be credited. So I also want to assume in this class, another thing is, for the sake of double entry principle, debit usually comes first before we talk about credit, okay? So an account is going to be debited while another account is going to be credited. So for every transaction, two legs must be posted. One account is taking debit, the other account is taking the credit. And that thing you also need to note is that there is also this that you need to remember, pairs, whatever they call it. So these pairs, P represent purchases, E represents expenses, A represents assets. So for these first three letters, purchases, expenses, and asset, these are the debits that we normally have. Any purchases that you make, okay, you have to, it's a debit. You usually have a debit entry. Any expenses that you incur usually have debit entry. Any asset that you purchase will usually have a debit entry. Now, the other side of it, we have revenue, we have liability, and then we have sales, okay? So all these usually have credit entry. There are other transactions as well that could also fall under any of this category. Like we talk about our accumulated depreciation, right, and any other thing. So we are going to be using these to guide us in our posting. So let's come over to the right. What I'm going to do is this. I'm going to simply delete all these postings that I've done, right? I'm going to delete all these postings that I've done. Now, when I delete all these postings that I've done, just give me 2 minutes. Let me quickly delete that, okay? Just give me 2 minutes. Let me quickly delete that. Already, another thing is my delete button is actually not working. So I'm just using the knowledge of Excel that I have to quickly achieve what I'm doing now. Okay, so I need to show us from the scratch how I was able to achieve this so that you as well can achieve that when the time comes. Okay, so as I was saying, okay, so we are going to take the transactions one after the other. For this Excel template that I built, I'm going to show, I already told us how I got it, right? Here is just a match cell. I just match the cell. For those of you that know how to match, I match the cell by going to the home page. Then I just click on match cell. Then it's centralized, fine. Then I also put a color from the home screen. I just put a background color from right over here, okay? Then the next thing I also did is the same thing for pairs. I also match it. Then here I have serial number. I have the transaction, okay, as it is happening. You also need to capture it over here. Then the next thing is that know that for every transaction, two accounts are going to be affected. One account is going to have the debits, the debit, and the other account is going to have the credit. Then another thing, and I put an extension here, which I call it narration. So this narration now is going to help us to be able to link whatever we've done on our double entry, whatever, it's going to help us to be able to link it over to our tribalance. So I also have a format of tribalance for us. So this format of tribalance that I have over here is really very good because if you see that all this is have been arranged, from the way it is arranged like this, you can easily link it into the IFRS-based financial statement that is also done on Excel. So all these things, the first thing we have over here is a share capital. All this one that is green, all these things are items that goes to the balance sheet, okay? Starting from the equity, the share capital, starting from the retained earnings, all these are all retained earnings, revenue reserve. Then from here we have current liability, we have the director's account, deferred tax liability, current taxation, all these are current liability. We continued also to be looking at the current liability, okay? Auditors you need to pay. We talk about other things, okay? All these items that are here are all items that belongs to the balance sheet. Then we also have where we have our asset, okay? Our non-current asset, we have building, we have motor vehicle, and also don't forget that immediately you have your asset, you should also have your accumulated depreciation that also matches all those things. For people that are in the what's it called? The class that we are having for people that paid for the practical accountant, they were able to understand how to actually get their depreciation, how to get the depreciation charge for the year, and how to also get the accumulated depreciation, okay? How to actually account for all those things, how to capture your asset, how to get the accumulated depreciation. Then when you're doing your expense place, you are going to have an expense that also indicates that is depreciation. So we have depreciation for the year, which comes to this account. Depreciation for the year will come to this account as well. It will also go to the accumulated depreciation account. So that is the second leg. So one leg is going to be your depreciation, and that leg is going to be your accumulated depreciation. So that is the depreciation for the year. For people that were in that class, they understand what I'm saying, but I'm also making it very easy for us. The first items that are here, they are all items of balance sheet, okay? Then from the yellow side, all through to the bottom, these are all profit and loss item, okay? So, and we are going to learn how to link them. I've already put I use, for those people that are also in the class, when I've been taking Excel, I've shown us how to actually understand all these formulas, okay? So, and we've also looked at this formula together. This is the if with the sum if formula, okay? And that is what we use to get all the things that we have over here. So already, this is linked already. It's just for us to get what we want to get, and everything is going to be very, very okay. So let us not also forget that the list is not exhaustive. We can always add more lists, provided that you know which item goes to which place. I'll make this very easy for you. You already have a capital, right? Probably you have what's it called? You have if you issue capital, if you issue shares above their nominal value, you can have share premium, okay? And every other thing. Retain any is here. For those people that understand how to get retain any, you can also add your net profit for the year, you know, to get what your retain any should be. So this is the chart of accounts. So, sorry, this is the trial balance, okay, that we're going to use. And here is our posting sheet. So let's start the work, right? Over here also, I have all this narration, which we are going to also get. So let me quickly use the opportunity to also delete all these. Okay, let me also delete all these so that when we start working on them, you understand what I'm doing. It doesn't look like magic, okay? So let me quickly delete all these, then we can kick off. All right, so let's look at the transactions one after the other, and I will explain to us what is happening. Then another thing is the transaction actually stopped at item 13. I was the one that copied this one downwards again. So I'm also going to delete this one as well so that it doesn't confuse you. You understand what I'm doing, okay? So I'm going to delete all these ones as well. Yeah, it's the same transaction. I was the one that just copied it down over here. So let's now start. The first transaction that is happening is this. Number one, they say capital was introduced by the owner into the business. How much was introduced? 500 pounds was actually introduced into the business. So once money is introduced into the business, two accounts are always affected. So what account and what account are affected? So I think at this junction, this is where I need us to actually give our input so that we can be carried along in the posting. Okay, so let's make the errors together. Let's do the corrections together so that we can all learn. Okay, so your mics are unmuted. So whenever you have this transaction, capital is introduced into the business, two accounts are affected. What are the accounts? Who can quickly tell me that quickly?
Let me try, sir. Bank will be debited and owner's equity will be credited.
Okay, so two accounts is affected. One is the business bank. So when capital is introduced, obviously, just like we go to the bottom, you can mute your mic, sir. Mute your mic, sir. Okay, so just like we go to the bottom, you discover that I already put this over here. So the total asset that a company has is made up, mute your mic. The total asset that a company has is made up of, it can be attributed to the creditors that gave us money to buy those assets and also the owner's equity. Okay, so you discover that when the owner gave us money, the money that the owner will give us, this side is assets. Then the owner gave us money from here. So you discover that two accounts are going to be affected. One account is the bank. Okay, so we call it the business bank. So the business bank is going to be affected. Sorry. So we are going to have a business bank. We debit it, right? Because money is entering into that account, we debit it by 500. Remember, my currency sign is at the top. So we debit it, 500 entered into our bank. Then we have to credit another account. We credit the capital account, okay? We credit the capital account. Also, the amount is also 500. So the account is balanced. If you go to the bottom, you discover that our totals are actually agreeing. So let me see what is wrong. The totals should actually agree. Okay, there is something in the way. Let me cancel this. Okay, so okay, yeah. So that is what is actually the issue. Yeah. So I'm going to copy this formula here, and I'll just copy it and put it in this other place so that everything will be summed properly. Okay, so I also told us that we should always audit whatever formula, whatever totals we are giving, you have to audit it to be sure that everything is calculating properly. So the first transaction has been catered for. So this transaction, 2 accounts were affected. The bank's the business bank and also the capital account. So if you check to the right here, you see that the business bank asset account has increased by 500, and then the liability account, right? The liability account also has 500. So 2 accounts has been affected. The debit side, you are going to have purchases, expenses, and assets. They are all debited. Then to the credit side, you're going to have revenue, liability, and sales. So let's go to the next one. The next transaction here, they say sales was made, right? So a customer came, purchased something from us, right? And he paid through a bank transfer, okay? So when the customer paid through bank transfer, how many 2 accounts are affected as well? What account and what account is affected? Can somebody quickly answer that on the call?
The bank and the sales.
Okay, so the bank account is, so which of the accounts is going to be debited? Which of the accounts is going to be credited?
The bank will be debited while the sales will be credited.
Okay, thank you. So business bank is going to be debited by 50, okay? While the sales account is going to be credited by the same 50. So everything is looking fine, okay? Sorry, I said 50 and I'm putting 500 by 50, so it's fine. Now, if you check now, business bank is still the asset account. The asset account is increasing, while the sales account is also have a balance now of 50. Fine, we are still looking good. The next transaction now, insurance cover was placed, and the value for that insurance cover was actually 37 pounds. So if you have a question, can you quickly ask the question before we move on? Your hand is up.
Yes. Okay. Thank you very much, sir. Sorry, I don't know if you can go back to the sheet again, sir. You said sales was made and deposited to the bank.
Yes.
And the answer was the business account was debited. I don't understand, sir.
Okay, so usually you don't look at this is your cash book. This is actually not your bank transaction. This is different from your bank statement. You know, when you check your bank statement, when somebody deposits money in your bank, the money will be on the credit side. Probably that's what you're looking at. This is posting. This is different from transaction on the bank. The opposite of what happened in the bank is what happened in your cash book. So this is your cash book as you're seeing it. So when it's sales is a credit, usually have a credit balance. Sales usually have a credit balance, right? So when one account already have a credit balance, you have no doubt about that. Okay, when there is sales is an income, it has a credit balance, then another account should be debited. And obviously that account is the bank. We made sales, Okay, the income account add 50, then the money we enter into our bank account as 50. So don't be confused with what happened in your bank account. Don't be confused with that. Look at the cash book. Opposite of what happened in your bank is what happens in the cash book. So this is posting. This is double entry principle. It's different from what happened in your bank. I hope that clarifies, sir.
Yes, sir. Yes, thank you very much.
All right. So that is that. So you see that this second transaction, sales account increased by 50. So you can see over here is a credit balance, which is sales, and the bank account, which is also an asset account, also increased by 50. That is fine. So the next one, insurance cover was placed, okay, and the amount was 37 pounds. So can somebody tell me what kind of transaction is this? Hello?
Expenditure.
Yes, this is an expense. So what account and what account is going to be affected?
The bank and insurance account, the expense accounts.
Come again?
Your bank accounts and the expense accounts.
So which of them?
Insurance will be debited. Bank will be yes. Bank will be credited.
Yeah.
So insurance account. Then here is the amount is 37. And here we have. Please mute your mic. Oh, your mic is making noise. Then we have the business bank. Mute your mic, please. Mute your mic. You heard me saying mute your mic now, and you are still leaving your mic on. Look at Tosin. Okay, so that is how to achieve that. So you can see that insurance is actually an expense. So expense account, why our business bank, okay, was credited by 37. So this business bank, obviously, you see that is not actually, there is no bank over here, right? But it actually represents owner's equity. So if you check over here, oh, that I've deleted it. So if you check, you discover that your asset, the total asset that anybody has, is going to become addition of your liability plus your equity. Okay, so part of the money that the owners, part of the money that belongs to the owner. So you know that immediately the owner gave us 500,000. That owner's money we take it to the bank, right? So we debited the bank and we credited the owner's equity. Now here we are making payment. Whenever we are making payment, so you will check. Anyway, let me not go into more details, but you understand that why there are two ways you can pay for an expense. You can either pay for an expense by paying by the creditor paying for us. You are owing somebody, right? If the creditor is paying for us, asset equal to liability plus equity. So liability is paying for us in that regard. Am I right, everybody? If, for instance, let's say your asset is actually equal to your liability. Okay, liability. Okay, then we now say plus your equity. Sorry, equity. Now, there are times that you will actually make an expense, but that expense, you will not actually pay for it yourself. Somebody will pay on your behalf, and then you are saying, okay, you are owing that person. You discover that at that point, liability is going to arise, right? So if you have an insurance, the person that plays the insurance cover for you, you have not paid him, you are obviously going to have a payable over here, right? So, and a payable is actually a liability. So if liability is here, then equity also can replace liability over here. So our bank, obviously, is an asset account, is going to reduce. So I'm just trying to explain to you why you are going to have asset here when in reality, I said our pairs, purchases, expense, and asset is always going to have a debit balance, while our credit balance is going to be revenue, liability, and sales. So just know that when you pass a debit entry to an account that usually should have a debit balance, if you now pass an opposite entry to it, it's going to reduce the balance on that account. Okay, so our asset account is being affected over here, and our asset account is going to be reduced by 37. So that's why I put it as asset is over here. Okay, in place of when a liability is paying for us, a payable, we are paying for ourselves. So an asset account is actually reducing. I hope I'm not confusing us with what I'm saying. Okay, so let's leave that. The next one, we have a business loan of £5,000. Can somebody tell me what account is going to be affected in these regards? Who can tell me?
A bank will be, yeah.
Yes.
Yes.
Your bank and your liability accounts.
Yes.
Okay, so
Loan accounts.
which account is going to be debited?
Bank will be debited.
Debit your bank and
And,
credit your loan account.
Overdraft will be created as a liability.
Did you call it overdraft?
Loan account.
Loan account, yeah.
Okay, so we debit our bank by 5,000, then we credit our loans account, which obviously is a liability on our behalf. So on that regard by 5,000 as well. So you discover that over here, two accounts are affected. The asset account is affected. The liability account as well is also affected. Now we have another transaction. Another sales was also initiated, right? And then the customer paid by bank transfer as well. Please, I want to beg us, once you've answered any question, mute your mic until I ask you to answer, because there will be interference from your background. Okay, now we say sales was made and deposited to the bank as well. So the value of that amount is actually £800. So what accounts are going to be affected now? Who can tell me?
Bank and sales. The sales account and bank.
Okay, so somebody said sales account and the bank account. So which of them?
Sales will be credited, bank will be debited.
Okay, so business bank is going to be debited by 800, right? By 800, and then sales account is going to be credited.
Credited will be 800.
800. So that is fine. So now it means that asset account has increased, while income account also increased. Is that also? Our sales is our income account. So income account and asset account were the two accounts that were actually affected. Now, for those people that were also in the class, when I was teaching us cash and cash equivalent, you also remember that I also told us where we have our cash and cash equivalent, we have bank is always going to be there. So the next thing is rent. Now, we paid for rent £1,500 for rent. So what kind of transaction is this? Who can answer me?
Rent will be debited. And
Credit bank and debit rent.
Credit business bank.
So this rent, what kind of transaction is rent?
Rent is an expense.
It's an expense. So we debit rent account, right, by 1,500, right, 1,500. Then the business bank is going to be credited by 1,500 as well. Okay, so that is fine. Now the next thing is owner's contribution. The owner contributed additional £10. So what happens in that regard?
Bank will be debited with £10.
Okay,
And,
bank is debited. Okay.
Owner's equity.
Then capital is
will be
by also 10. So you can see that here our asset has increased again. Our liability as well also increased. Okay, now the next thing is purchase of inventory. So we purchased the inventory for £2,000, and in the bracket you see they say net 30. Whenever you have any transaction that you are not paying for immediately, that they gave you a grace period. Now over here, whenever you are hearing net 30, it means that you are not going to pay immediately. You're going to pay in the next 30 days, right? So in the next 1 month. So what are the likely accounts that are going to be affected over here? £2,000 was purchased, okay, of inventory was purchased, and they put in bracket net 30 to tell you that this stuff has they have not paid for it, it's in the next 30 days that it will be due for payment. So what accounts are going to be affected?
Sales journal.
Inventory will be debited, and payable accounts payable or creditors will be credited with £2,000.
Okay, so inventory accounts, inventory will be debited by 2,000. Yeah, then account payable. So we have let's just call it payable, okay? So that we don't, let's just call it payable, which also be debited. Oh, sorry, we credited by 2,000. Make a lot of sense. Now the next thing, we also pay for another space. We rented a space, okay, for £700. So what are the likely accounts that will be affected?
Rent and bank.
Okay, rent accounts. So we have rent. Rent is actually £700, and business bank is going to reduce by also £700. Fine. Then the next one, sales of £1,200 was made. However, they told us that only £500 have been collected. So what are we doing? What accounts are going to be affected? How many accounts will be affected here?
3 accounts.
Okay. So what account?
Bank, sales, and receivables.
Bank will be debited by 500.
Okay, bank will be debited by 500. Yes.
The remaining 700 will be to receivable.
Debit or credit?
Debit.
Okay, so receivable.
Yeah.
Receivable account.
700.
Okay, will be debited by 700, right? So we have 700 per year. Then
sales
okay.
1,200.
Okay, so sales is just 1,200, right?
Yeah.
Okay, sales is 1,200. Do we all agree with this? Do you all agree? Just give a thumbs up. Okay, so fine. Then the next thing we're looking at is we're looking at inventory used for sale. So inventory that was used up during the time they are making these sales, they used up an inventory that worth £250. So what are the accounts that are going to be affected? Inventory was used up for sales. What accounts are going to be affected? How many accounts?
Bank and inventory.
Bank and inventory. Beautiful. Do we all agree to that? Hello, we are not talking now. So,
Let me explain.
actually, what?
Please kindly explain, buttress more on it. Why is it the same number?
Okay, so the man that just gave us that answer, which of the account is going to be debited? Which of the account will be credited first? Let's have your own answer first on grant before we now decide to treat it. Yes. Hello.
Yeah, the inventory account will be debited, while bank will be credited with that value.
Okay, so you say inventory account will be debited, just like, let's just put it, inventory account will be debited by 250, right? And you say bank account will be what?
Credited.
We're credited by 250. Does it make sense actually? Because they say inventory used for sales. They didn't tell us
it was used for sales.
it was used. Yes. So does it make sense for us to go and pay money for it? Don't we have inventory in our
Inventory should be credited, sir.
Okay.
Inventory and sales.
So who shall we inventory and what?
It should be inventory and sales. Inventory account and sales account.
So which one do we credit? Which one should we debit?
You should debit inventory, then credit sales.
Okay, so we debit inventory and credit sales. Okay, so the question I want to ask you is, does it make sense that we do it this way?
Okay, so I would say inventory and maybe raw materials.
Okay, hold on, madam.
Yeah.
Yeah, if you say inventory or material, so which one are we debiting, which one are we crediting?
Credit inventory, because I think inventory is going out. So credit inventory to reduce it.
Okay.
Then, yeah, so raw materials or maybe any other ledger shop. I shall know we are crediting inventory.
Okay, so inventory, then you say raw material. Raw material. Okay, so raw material. All right. So thank you, everybody. You have all tried, right? But whenever you have
Let's say something. I think it's purchases. I mean, no. Cost of sales. Yes, raw materials. Okay, go on, sir.
okay, so thank you very much. You all tried, but whenever inventory is used for sales, obviously that is cost of sales. So cost of sale, people that say we should put sales here, are you making additional sales? This thing was used for sale. It was not sold. It was used for sale, right? So the sales that was made was this 1,002. And the material that we use for the sale cost this amount. Obviously, you need to give account for that material. Kindly mute your mic. This Tosin Aina, you're disturbing the class with your mic. Okay. I hope we don't unmute your mic again. Okay, so that is fine. So what we are going to have obviously now is going to be so over here is going to be our cost of sales. Here we're going to have our cost of sales. So this is going to be costs of sales. And right over here, we are going to have our inventory. It's going to reduce. Inventory is going to reduce. Okay, so that is fine. So this is how we're going to have this value. Now over here, the last transaction is paid towards inventory balance. We paid money towards inventory. We paid 400. So what is the posting going to be now? When we paid money for inventory, what is going to be? We paid towards inventory balance. Who can tell me the account that is going to be affected in this regard?
Maybe accounts payable and bank.
Okay, so somebody say inventory and bank. Which of the account are we debiting? Which of the account are we crediting?
Payable will be debited. And, yes, and bank will be credited.
Payable will be debited.
Inventory will be debited and bank will be credited.
Okay, so payable will be debited and business bank will be also 400. Okay, now the reason why I am going only with the first speaker is because he actually got it right. So payable will actually be debited. Now let me tell us something. On no account should you pass a debit posting to sales. People that were saying we should put sales here, it actually it could make sense, right? When you put sales here, so that sales will be reduced from 1,200, it should be reduced by 250 to mean that you've net off cost of sales. But on no account should you post a debit entry to sales. Rather, here, cost of sales is what will be affected. Then here, they say paid towards inventory balance. That means that we purchased inventory already. We already know the purchase of inventory. We purchased inventory for 2,000 pounds, net 30. So out of this money that we're owing this guy, 2,000. We're only able to pay 400 out of it. We are still owing some money. It means that at the end of the day, we should be able to get what is our payable value. How much are we owing them? Then let me also now add another transaction, okay? Just for emphasis, let me add another transaction. Let's say, what do I want to do? Okay, so sales. You know, whenever you are issuing your invoice, let's quickly put an invoice downwards. So let's quickly put this invoice downwards. Okay, so let's say this is our invoice. from our company. So we have an invoice over here. Invoice. Now on your invoice, you have a lot of transactions. Like you can talk about vehicle repair, vehicle repair. Okay, vehicle repair. We repaired it for like, let's say like a 350,000. Yeah, we have raw material. Sorry, spare parts. Yes, so we have spare part that we use for it. I'm just trying to like just add this one to it. Spare part. We have spare part of like, let's say 800K. Then the next one we have vehicle detailing. Vehicle. Please mute your mic. Vehicle detailing. Mute your mic, please. Vehicle detailing. We did that for like, let's say 25,000. 1, 2, 3. Then we also did wheel balancing. Wheel balancing. And alignment. Okay, so wheel balancing and alignment, we did it for like, let's say 15,000. So then we also have so that is 15,000 over here. 15, 1, 2, 3. Then at the end of the day, we also are going to have VAT on it. So we're going to say equal to, so let's have our VAT. So it's equal to 7.5%. Our VAT is 7.5%. Am I right? 7.5%. Then we now say times, we now say sum open bracket. We are going to add all these things together. Then we want to close it. Yeah, so this is our VAT actually. So let me make all these things look like Naira. So now this is it. Now at the end of the day, our total, we have our total here. Total is going to be equals. Now they told us that sales, you already have your inventory, right? So they say that sales for your invoice now, you know that sales was made, right? In bracket, they now say net 30. Net 30. So tell me, how do we treat this one now? Sales of, let's say, sales of, let me put that figure, let me put that sign, insert. I come over here and I say these stuff. I want to use this. Okay. So sales was made. And how much is the sales that was made is 1,171,750. 1,171,750. 1,000,000, comma 171, comma 750. So how do you treat this? You have your invoice, right? You have your invoice. You know what your invoice is. So how do you treat this transaction? Who can tell me what are the so this sales was made for this amount, net 30. So who can explain to me what kind of transaction is this, and how do we post it?
Is a credit sales.
Okay.
And we debit debtor, then you credit sales.
Okay, so tell me what we should do. Narrate me.
Yeah, I said debit debtors, which is receivable. Then you credit
Okay, by what?
sales.
By what?
By 1,171,750.
So 1,171,750. Then the other leg is what? You say I should
Credit sales.
sales for how much?
Yeah. By the same amount.
1,171,750.
Yes.
Do we all agree? Do we all agree to this posting?
No, sir.
Okay.
That sales will be splitted between yes. That says Yes, that sales will be splitted between sales and VAT.
Okay, so what will it be? What will it be?
Okay, you have the analysis down there. I don't know the figure for VAT.
Okay, so let's do something like this. We have our VAT value, Abby.
Yes, sir.
Our VAT value is actually equal to, we come and pick our VAT value over here.
Oh, yeah.
So
that is 81, yes, 8174.
When I come here, when I say equal to these.
Yeah, that's the
minus these, Abby.
Yes, sir.
So is this what you're saying? Do we all agree to this, or there's another opinion? Do we all agree to this, or there's another opinion? Let's talk. Everybody on the call. Can anybody see me?
Yes, sir.
Yes, we can hear you.
So what's going on? Nobody is talking to me. Talk to me.
I agree, sir.
Okay.
I agree, sir.
I'm still in the class. I'll call you back. Okay, so as I was saying, yeah, a lot of people said they agree. Well, actually, is this your final answer before I pass my verdict? Is this your final answer? Everybody on the call, is this your final answer? So let's go down first and see. Okay, everything actually balances, right? So you can also pass a wrong entry and it also will balance. Okay, so that is not actually a yardstick to determine whether it's going to work. So I think it is actually correct. The reason is this. Let me tell us why it's correct. Normally, you can't say, now you know that your receivable is owing you this total amount. Whether it's not going to say, I owe you VAT of social amount, I owe you sales of social amount. No, it's going, when you want to pay us, or when we are saying it's owing us, the total amount is what is owing us. It will not change, right? But for the sake of record purpose and for the sake of paying to know the amount of money that goes to the government, you need to separate your sales from your VAT. Okay, so that is why here this guy will never deny that he's owing us this amount. He will not split it and say, okay, I am owing you 1,090,000 something for sales, then I'm owing you 81,750 for VAT. He will not say that. The amount is owing us is the total value, but we are the one that will now split our sales between what should be our own money and what should actually go to the government. So is that noted, everybody? Are we good?
Yes, sir. Yes, sir.
All right. So since that is taken, now the next step is what we're going to do. Now we already have this thing like this. This thing can never feed into this trial balance. So I need to tell us what to do in order to make this thing go to the trial balance. So this is what we're going to do. Now, we already know that the credit side and the debit side, they've balanced, right? So what we can do is that let's copy this transaction, because this transaction, we actually treated this twice. One debit, one credit. So let's copy it again. Once we copy it again, we now come over here and let's leave a gap. We come over here and we come and put it. Let me just put it over here, okay? I just make Ctrl V. It's the same transaction, right? We've posted it twice. One is a debit, the other one is a credit. Abi? So let's now let's copy our debit. Let's copy our debit. Let's take our debit now. Let's carry it from here. Okay, we move it downwards to where it begins from. Okay, now we now have something like this. We have our credit separate, we have our debit separate. We've not done anything wrong. Everything is still the same. Are we together? Hello?
Yes, sir. We are
Yes, sir.
together.
Is it making sense?
Yes,
Yes.
sir.
Yes, sir.
Yes, sir.
Okay, so yeah, I don't want this place to be just vacant. I'll just put 0, 0, 0, 0 here. Okay, so I want to put just 0 here. I'll just copy the 0 and put it all through this side. Okay, so our 0 is now over here. So over here also, I also want to put 0 over here and all that. Okay, so now we now have 0. Now the next thing we want to do now is now,
Sir,
okay, I can hear you.
Won't debit come before credit?
It doesn't matter. You can.
All right.
So the most important thing is that debit is always coming before credit. Now look at debit.
Yeah.
Are you not seeing debit first?
Yes,
credit?
I've seen it, but I was thinking that all those debits from bank and what have you will be on top. And
No, it doesn't matter. It doesn't matter.
All right, sir. Okay, sir.
Yeah. So now you see what I've done. So you can do it anyhow. If you like to put it for the other way around, it's the same thing. Just make sure that you don't mix it up and everything is done properly. Okay. You can see the way I did it. Just follow the step of taking. Now, the next thing I want to do is I want to now classify this thing based on what we have in our trial balance. So the first item, let's look at the first item that we have on the list. The first item is capital. So let's come to our trial balance. What do we call capital? Okay. So remember I told us our trial balance, I've divided it into two. The first part is for our balance sheet, which is your statement of financial position, and the other part is for your statement of whatever. Okay, so it makes it very easy for us. Don't sort it, leave it exactly the way you see it. Don't sort it. Now the first thing we're going to do is that we are asking for what our capital is. Obviously our capital is a balance sheet item, so let's quickly go straight to where balance sheet is and look for where capital is. So what are we calling our capital? We are calling it share capital. So let's copy this share capital, and then we'll now come over here to our narration. Come back to our narration. So this is our narration. Over here, the first transaction is actually a share capital. That's all. It has been linked automatically. So if you come over, so now anywhere we have capital now, just copy this share capital and put it there. So we have capital here, share capital. We have capital here also. Let's call it share capital. Is there any other place where we have share capital? For this place, there's no other place. But let's check down over here. For here, we don't have share capital again. So we've treated all the share capital. Let's save and let's go and check what our trial balance is. Our trial balance is not telling us that we have 510 as our share capital, which is making sense, okay, because it has been linked. So let's come back to our posting. Our trial balance actually is, sorry, our capital is actually 500 here, and here is 10, making it 510. Makes sense. Abi, are we together?
Yes, sir. Yes, sir.
Okay. So the next thing we are looking at is what? Sales. And what is our sales called? We already know that our sales, is it a balance sheet item or is it a profit and loss item? What is the answer?
Profit and loss item.
Okay.
Fine. So go to your balance sheet quickly and look for it. Go down. Where is our sales? Obviously, this is where our sales is. So you can call your sales anything depending on whatever industry you are, okay? But I've done this work for you to make it very easy for you to be able to trace and link your trial balance. So we are copying this one. This is our sales. So we copy it and then we come to where we have, anywhere we have sales, we're just going to put it in front. So there's sales here. So this is our sales. Where is sales again? Here is our sales. Is there any other sales again? Here is our sales. Okay. Any other sales? Let's check. Okay, there's another sales over here. Fine. Is there any other sales? Let's go down over here. There is no sales again. Fine. Let's save it. We are done. So let's check for the next item. The next item is actually our bank, right? So our bank now, is our bank a balance sheet item or is it a profit and loss item? Who can tell me?
Balance sheet.
Balance sheet. Are you sure?
Yes, sir.
Under where
Yes,
under where
sir.
under where I'm going to see bank.
Balance sheet.
All right. All right.
Yes. So under our cash and cash equivalent, that is fine. Please, once you finish speaking, mute your mic because somebody's mic is actually making noise. Okay, you might not hear it, but I'm hearing it from here, and it's going to affect the recording. So we come back to our trial balance, and then we come and look for our bank. So let's go to our bank. They said is a cash and cash equivalent under current asset. So let's come straight to where our current assets is. So current asset, we have cash over here. We have all these are supposed to be current asset bank, not cash. So this is bank, this is bank. So you can tweak the whatever the way you like it. So here, I might tweak this one to say this is my current account bank, right? So let's quickly call this bank so that we can see that at a glance it's actually bank. So current account bank. So I will save it. Then I can also copy it and put it where I have all those banks. So I have one over here, my GT bank, right? So this is bank. I have one. So that means that after that GT, there should be other banks underneath it like that, rolling down. So I have it over here, bank, heritage, bank, right? Then I'm coming over again. Anyway, even if you leave it as that cash, we already know that it's a cash and cash equivalent. So Sterling Bank, yeah, Sterling Bank, all these are all banks. Okay, like that. So now we are looking for any of the bank, right? We did not specify whatever bank it is. So let's just, for this narration, let's assume that we are using First Bank account, okay? For anywhere we have bank, let's replace it with our First Bank account. So let's come back to our narration. So we come over here, here is Business Bank. So we are calling it First Bank. So is there any other bank? Yes. So this is First Bank. Any other bank again? Yes. So this is First Bank. Any other bank again? This is First Bank. Any other bank? Yes. So these two, 1, 2 is First Bank. 1, 2, V. Is there another bank again? Yes. So these two as well is also First Bank. Any other bank? Yeah. So this is also First Bank. Is there any other bank again? Yes. We have this bank as well. This is also First Bank. And so on and so forth. Now, is it making sense to us? Yeah, so let's save. Let's go and check what our bank is. We come over here and we check our bank now. Our bank now, we have 4,223. Obviously, our bank is actually an asset. So obviously, it's going to have a debit entry. So it's making sense to us. Our bank, we have this amount. Let's come back to our posting. What is the next narration? The next narration is our loan. So let me ask us, our loan, where does it belong to? Does it belong to balance sheet item, or is it a profit and loss item? Who can tell me that?
Balance sheet.
Balance sheet, sir.
Okay, so we come back to our trial balance. Mute your mic. We come back to our trial balance. Let's go to, now under where are we going to see it? Is it under asset?
Liability.
Under liability. So let's look for our liability account. So we have current liabilities. We have liabilities. So let's check from here. So we have director's account, deferred tax liability. Let's go and check for where we have our payable, because our loan. So here now, so we have other payables, loan. We can put it here. We have trade payable, which relates to what's the business of the company. But because loan is another payable, so let's just call it under other payables. Then in bracket, in dash, we now say loan. Let's copy this and let's come over to where we have our posting. So here, we're going to have it as our order payable. Then is there any other loan? I'm not sure. That should be the only loan that we actually have. Okay, that is fine. So let's go to the next transaction. The next transaction, we're going to be having payable itself. Now this payable now is purchases of inventory. And don't forget that this same inventory was what we also used when we are making sales. Obviously, this kind of inventory, that we purchase it on credit. It means that this our payable is not ordinary payable, but is what payable? Who can tell me? What payable is this? So since, yeah, it's a trade payable. So where are we going to see our trade payable? Are we going to see it under balance sheet or under profit and loss account?
Balance sheet.
Current liability.
Okay, so we have our trade payable here. We copy it.
Yeah.
So we copy our trade payable account. Then we come over to where we have, okay, over here. trade payable. Then anywhere we have that payable, we come out, replace it with it. Control V. Then let's check any other payable. Let's check inventory, payable. We are looking for payable. Yeah, there's another payable over here, right? So we just come here, Control V as well. So you can see that it's very easy to actually use our trial balance, right? So what is the next transaction? We have filled all these things like this. So the next thing is inventory. So inventory now, is it an asset or is inventory a liability?
It's a current asset.
Okay, so inventory is a current. Are we going to sit under balance sheet or under profit and loss account?
Balance sheet.
Under balance.
No, profit or loss account.
Inventory.
It's a lot.
Inventory. Okay, it's a current. It's a current asset. It's a current asset. Kindly mute your mic. It's a current asset. So you can see here. Obviously, here this is where we have our inventory. So we just copy it. Our inventory. Just copy it and just come over to where we have our postings, and then we say, okay, this is our inventory. Any inventory we have, we're just going to put it at this. Any other inventory, VAT, let me look for that. Okay, this is another inventory over here. Control V. Any other inventory again, I'm not sure. Okay, so that's how we're able to achieve that. Then let's go to the next item. The next item over here is actually our VAT. So let's come, our VAT now. What's our VAT? Is it an expense? Or is it what is our VAT?
It's a current liability.
Okay, so under balance sheet or under profit and loss account? Under
Balance
where?
sheet. It's a balance sheet item.
Okay, so we now come to our balance sheet. So our balance sheet, we are looking for where we are going to have payable. Okay, so where we're going to have payable. Yeah, so this current asset, let's go to liability. We have over here, we have insurance claim, employee pension, withholding tax, or whatever, dividend. These we have payee payable, we have trade payable. We can also have a line item to call VAT payable. Okay, so let's because we don't want to mix it up with other payables and all those stuff, right? Because it's actually important. Let's have it separately. So what you need to do whenever something is not on the list, right? No need to panic. You need to actually. You saw it. Where is it?
It's right before.
I can't see it here. Before non-current asset.
It's on 32. Right.
Yeah. That's true. Sorry. So I copy this now. Our VAT payable. Okay, I thought it was not there, but it's there. So I copy it now. You discover that what we have really occurred if I put my VAT payable here is that it's going to be reporting under this one as well as that one. It will not make our account to balance. So it's important that we first of all check it well. Check everywhere you have your coin liability well to be sure that that thing you're looking for is actually not there. Because if you go and put another VAT payable over here, it's going to capture, you know that this is like a software. It's going to capture the figure under this one. It's also going to capture it over there, and it will not make your account to actually balance. So let's come over here and let's put VAT payable. So thank you for that man that assisted us with that. You are really a lifesaver. So the next thing we have is insurance, right? So insurance now, what is an insurance? And then where are we going to find it? Is it going to be under balance sheet or under profit and loss account?
P&L.
Profit and loss account.
Okay, so let's go and look for our. Somebody say current liability.
No.
Insurance.
It's not insurance.
So let's.
No, it's an expense.
So it's an expense. So we are checking our expense. So here is where our expenses are from. So let's start checking our insurance. Insurance. You see, let me know. Okay, I think this is insurance, right? So they didn't specify what insurance it is. So it can be any insurance. It can be insurance, professional indemnity. It can be anything. So let's just copy insurance. Insurance is insurance. Let's come back to our posting, right? Then we say, okay, where is insurance? Insurance is here, Control V. Is there any other insurance again? Let's check our posting. This is rent. This is another rent. This is payable. This is cost of sales. This is receivable. So we don't have it over there. So let's look at the next transaction. The next transaction is actually rent. It's also an expense. Am I right? So we come back to our trial balance and let's go and look for our rents. So we have audit fee, we have rent and rate is here. So we quickly copy our rent and rate, and then we come over to this place. We come and put it right over here. So these are rent and rate. Is there any other rent? I think there's another rent. This is another rent over here. Control V. Then the last, no, not the last actually. We still have another transaction which is receivable. So let's come to our receivable. Here now we're going to have receivable. So our receivable, is it a balance sheet item or is it a profit and loss item?
Balance sheet.
It's a balance sheet. It's a balance sheet item. So I like the way the man call it. It's a balance sheet. Balance sheet. Okay, so yeah, trade payable. So it's going to be under our current asset, right? So this is our trade payable. So we quickly copy it over here. I will come back to our postings and then want to have it here. Okay, so Control V. Then the next thing is our cost of sales, which we are going to have here. So our cost of sales now, is it a balance sheet item or is it a profit and loss item?
POL item.
Profit and loss item.
Okay, so POL item. So let's go for our okay, so I guess this is it. So this is our cost of sales. So I called it direct cost. Okay, I just call it a direct cost. So let's just come over to our postings and put it as a direct cost. So I just put it over here as a direct cost. So when I put it over there as a direct cost, then once I put it as a direct cost, then we can see that yeah, have we done receivable? I think we've done receivable before, right? So this is receivable. So this receivable also we still need to copy it from here and trade receivable. Yeah, so we still need to come and put it here, and that is the last. That's the last entry. There's no other entry again. You can see the way it goes. Our yellow represents our profit and loss item, while our green represents our balance sheet item. So this is how we're able to get this. Then over here, our posting actually balanced. Then under our trial balance as well, if you check it, you go to the bottom, you're also going to see that our posting also actually balances. Look at it here, our posting balance, and here also our posting balance. So that is how to go. You discover that it's not actually the same amount with what we have over here. The reason is because there are certain transactions that happen on the left as well as on the right. For instance, inventory is here, inventory is also here. So it's going to do a plus and minus, and the net amount is what is going to capture. Okay, so our bank also is over here. Our bank also is over here. So it's going to do our plus and minus, and our the net amount is what we are going to have under our bank. So look at our bank over here. So this is the amount. So you can see that this is actually a software. Now, once you are able to get all these things right, we are posting it every day. As you are posting it every day, by close of business, you are linking your transaction, you are linking it to your trial balance, you are linking to your trial balance. Then, for those of us that we did not join the practical accounting, this stuff, I'm also going to show us how this thing is also linked to all your accounts, so that as you are posting your whatever, your account is generating on its own. As you can see, this thing is balancing here. Also, this your account also is balancing over here. So also the account you are creating as well is going to also balance. So this is the way to go. This is the way to go. So now let me give us room to ask questions. But before we do that, let's also go further, okay, to look at how our chart of accounts should look like. For those people that are going to learn in the new training that we're going to have, we've done Zoho books to a large extent. The new training we're going to be working on Sage accounting, as well as QuickBook. Okay, so I have this chart of account that we're going to use is different from the one that we actually had before. Okay, so that one we had before was for Zoho, and this is like another chart of account that we can also make use of. Okay, so if you have knowledge of the former one, this is actually not new to us. Okay, so I just wanted to show us, and then to also show us how some transaction is going to appear. For instance, look at your fixed asset over here. Your fixed asset is positive, right? While your accumulated depreciation is always going to be a credit transaction. That's why it is negative. Okay, you're going to have it like this and all that. Okay, so this is accumulated depreciation. Then what else? All your liability, all every of your transactions that are on the credit side are always going to be in bracket like this. So this is how it actually is reporting in your Sage or in your QuickBook or whatever you are posting into. You just know that you are posting, right? You just know that, okay, this account, you're debiting this one, you're crediting this one. But at the end of the day, when it's going to have all those things listed, this is how it normally record them. Some is going to be jacketed, while some are going to be positive. Don't also forget that they are not reporting on the same interface. Some will be posted to our profit and loss account, while others will be on our balance sheet. Sorry, while others will be posted to your balance sheet. Okay. So at the end of the day, everything should actually become zero or more, but that's just it. So I was only able to get to cost of sales. We still have other things like expenses and every other thing. There are a lot that we're going to learn, okay? So this is just one of it, okay? I'm still going to put us through accounting 101 and any other thing that we need to know. And we're going to move further in the training on Saturday. So it's really nice having us here. If you have any question, feel free to ask question now before we call it a day. Feel free to ask question before we actually call it a day or a night. Are we together? Any question regarding what we've done today?
Yes, good evening, sir.
Yeah, good evening.
Thank you so much for the lesson. I really appreciate. This is my first time of me attending this class due to my busy schedule. So please, and alongside it, I came late. So I don't know if there's any way I can get like a video of it. So,
okay, yeah. So we normally upload it on YouTube. It's going to be uploaded on YouTube, actually.
okay.
Yeah.
Okay, no problem, sir. Thank you so much. I really appreciate it.
Yeah, you're welcome. Any other question? Any other question? Any other person?
Okay, good evening, sir.
Yes, sir.
Good evening.
So my question is, thank you for the knowledge you've imparted on us tonight. Thank you so much, sir. May God continue to bless and bless your own affair as well. So my own
Amen.
question is that do we have something like this Excel that is template, or we have to create it by ourselves?
Yeah, okay. So you can actually create it yourself if you are, at least you're following the class, right? You can actually create it yourself. That is one of the reasons why we actually attended the 30 days Excel challenge, right? Is for us to be able to be independent, to be able to create things and all that. Okay. However, people that are in the other training, they is sure that they are going to have it, right? So, and if I am also moved, I can also share it with us, okay, so that we can use it for practice. But I mean, there's nothing actually so special in what I've done over here. If you have been attending the practical accounting, sorry, I mean the 30 days Excel challenge, you would have known that we've done something similar to this before. This code has been done before. We've done it in the class before. It's just that code that I just took and I just dropped here. So, and that is what is giving us what we have over here, okay? It's nothing actually special, right? So there's nothing special about what you're seeing over here. However, I can decide to drop it, okay, for us. Okay, that is fine. Is that okay?
Yes, sir. Yes, sir. Thank you so much, sir.
Okay, so any other question? I think a lady wanted to ask a question the other time.
Yes, I wanted to. Sorry, sir. Thank you for the opportunity and everything. I wanted to confirm the trial balance, the formula, but I think I just saw it now. When you put some if something like that. I think when we have the Excel, I'll be able to go through it. I wanted to see how you link it and the formula
Okay,
you use there.
okay.
Yeah,
All right. So I guess you are a an Excel guru yourself. Am I right?
I learned from here, sir. No, I'm not a guru.
Okay. So this is the formula. So I can tell you categorically that the formula we have here is the same formula that we have here. Only a little tweak was done to it. At the end of this one, you see that this is just 0 with a closed bracket. But if you check over here, it's a 0 with a closed bracket times -1. Okay. So also there's another adjustment that we also did to it, which is also different, but it's the same formula. Everything is the same. Okay. The only difference is just this thing over here. One is greater than 0. The other one is less than 0. One has times -1. The other one doesn't have times -1. So this is less than 0. This has times -1. This is greater than 0. We check here. This is greater than 0. And this doesn't have times -1. That is only the difference. Otherwise, everything is the same. So it's the same formula we are having on the debit side. It's also the same formula we are having on the credit side. The only difference is the greater than 0 on this side, which over here we have less than 0. And here we also have times -1, and over here we don't have times -1. So that is that. So we've actually learned a lot in this Excel class. We've learned pivot table, which is another thing that can also give you. So now, hey, let me just say this also. Now we've learned how to do this our daily postings, right? And how to link it to our trial balance. Then from our trial balance, we also learn how to link it to the main account. So we're going to be creating all those accounts, our what's it called, our profit and loss and every other thing. So we're going to be learning all those things. Also, we're also going to learn in case you have a company that the company doesn't have record. For instance, now it's a company that has record that we posting daily, like as transactions are unfolding, we're also posting them daily, right? Then you also go further to now link them into your trial balance. What about if it's a company that does not keep record? Maybe the owner of the company just does all the transaction from his bank account. We are also going to learn that in the training. Okay, we are going to learn how to do analysis of bank statement, and from our analysis of bank statement, we generate our trial balance. From our trial balance, we go to the other accounts and everything, and everybody is fine. We're also going to learn chart of accounts. We're also going to learn a lot of things. Okay, so that is just that. So let me leave room for people that still have questions to ask. If you still have questions to ask, feel free to ask or mute your mic.
Okay, thank you so much. So quick one, sir. For the other training that you have been doing before, I noticed that was on weekends. I think both Saturday and Sunday. That's when those was post. So now, I think today is Wednesday, right? Do you have any particular timetable that we are following, or we just do any class or whatever the day that we are free, sir?
Okay, so this is, thank you for the question. So this is it. This is how we have been operating. We were doing our Excel 30 days challenge. We're always doing it on weekdays, right? Weekdays we always have our Excel 30 days challenge. So at times I might not be motivated to take the class, but right now we've done 22 days. Okay, we have like 8 days to go. So at times on weekdays I might not be motivated to take any class. I will just come and tell us that there's no class. On weekends, we were having Zoho books, but that lecture on Zoho books has ended. Okay, it ended abruptly. There are still some little lecture that is remaining that I said, okay, I'm going to record those lectures and I'm going to send to us. Okay, an example is okay, you can see I'm using a Google Meet for this training. I can actually use OBS Studio for the training as well. So OBS Studio is going to even be clearer. So right now I'm learning how to use OBS Studio. Let me quickly check let me show all something. In our OBS studio now, I can actually do this recording. It's going to be clearer and everything. You're going to see things clearly. Okay. So here you can see my cam. My cam is showing my face actually, but it's dark over here. You cannot see. Then I also try to do some recordings today. Let me see if you can see the recording. So look at the recording I did today in the same training. But let me just see if I can actually let us see it. So this is it over here. Yeah, so this is it over here that I did today. All right, so I'll be recording those things and I'll be sharing it with us. Those people that, so this is the recording I did today on OBS, okay, and it's actually very clear and all that. So I'll be doing more of those recording on our Zoom so that we can have that done. But for people that paid for the other class, they are the one that will enjoy the other class more. Okay, so that other class is for weekends. Why the other Zoom book, I'm just going to be recording it and be sending it to people. Does that answer your question, sir? So now on Saturdays and Sunday, the class that we're going to have now on Saturday and Sunday is the practical accountant. That is the training we are having, okay? So that one covers everything that accountant needs to know at the place of work, bank reconciliation, how to create IFRS-based financial statement from source document and everything. And okay, so this is just one of the training that we are also going to learn over there. Any other question?
Good evening, sir.
Yeah, good evening, sir.
Thanks so much for your efforts and partner. Please, the last part, I don't know the name that you call it. Maybe it's the one you call QuickBook or something. I want to have clear understanding of it. The last page you show us.
Okay, so is it what I just showed us now?
No,
Yeah, I said that.
about after that profit and loss balance sheet and the rest like that. The last one, as I said, we can link something with it.
Okay. Are you talking about chart of accounts?
Yes, exactly. This one.
Yeah, so this chart of accounts.
Okay. It's just
Yeah.
out of account, not
Yeah,
QuickBook.
No. But this is the chart of account that we're going to import into Sage and also QuickBook.
Okay.
Yeah, so this is chart of account we're going to import into Sage and QuickBook. Yeah.
Okay, thank you, sir.
No problem, sir. So is there any other question or can we call it a day for today? Okay, so in the absence of any other question, I want to say thank you all for your time. Thank you for,
So Jay, mine is to say thank you.
Thank God, sir.
Thank you, sir.
Thank God, sir. So, good night.